morning, everyone. Today I'm mainly focused on my first part of my dissertation. It's about the moderating role of accounting quality under a very specific context, that is the US-China trade war. I will provide evidence from this context. And here I'm from National Taiwan University. As we all know that since the 1980s, so many entrepreneurs from Taiwan, they invest huge amount of money, invest facilities located in China, and conduct a triangular trade mode. Taiwan take an order and ship to the China to produce, then export from China to the other world. Most famous, such as TSMC, produce a semiconductor, and Foxconn. And I use Taiwan as the main research object is because of few countries are both economically and politically important to both China and US. And like for China, according to China's official statistics, Taiwan placed second among China's top 10 important stories in 2019. On the other hand, according to the Wall Street Journal, December 5, 2021, Taiwan is the US 8th largest trading partners. And according to Taiwan official statistics, the ratio of Taiwan's export to both China and US account almost 55% on average from 2000 to 2021. So due to the Taiwan's close tie with China and US, it is more appropriate to take Taiwanese MNEs as a sample for the study. And because of the news of trade war has shocked the capital market in Taiwan, particularly those firms located in China and also sell their commodity to the US. And this news draws investors' attention on internet. So in that period, we can see newspaper, headline, commercial TV, commercial magazine, all of these are talk about that. So my question, I will conduct the event study mainly focus on these 5 key events. I'm trying my best to capture these 5 events to match to our headline of newspaper in Taiwan. And here's my research question. My research question first is that do market participants have a higher demands for information on tariff-affected firms during the period of U.S. trade sanctions against China? There even mentioned a need for them. And my second question is that based on Q1, do tariff-affected firms with high quality accounting information play a moderating role for market participants? Why is it important? The impact of the trade war on MNEs is still a hotly debated topic, as evidenced by the abundance of news articles and online media comments. And I will follow and extend the finding of Armstrong et al. 2019 that show that the quality of firms' accounting reports play a role in transmission of monetary policy by influencing the information asymmetry between firms and capital providers. However, at a broader policy level, like unilateral trade sanction against other countries, little is known about the moderating role of accounting quality. Since tariff news is an exogenous event that can provide a research opportunity for us to use event study method, and as all the Taiwanese listed firms are required to disclose information about Chinese facilities located in China, and also a major customer disclosure regulation, they need to disclose the sales to the United States. So I can adopt these 2 disclosure criteria to identify my treatment group and control group. I will describe it later. And here's my hypothesis development. I'm coming from the limited attention theory. The limited attention theory posits that economic individual individuals process news events based on their importance due to their limited ability to process information, so-called category learning, which implies that the investors may not incorporate all available value-relevant information into prices. And furthermore, Chen et al. 2018 show that many investors have adopted a top-down profile management approach to determine their optimal risk-return trade-off based on macroeconomic fundamental and perspective. So based on their finding, I argue that the investor may have prioritized macroeconomic news over fund-level news. So here is my hypothesis one. On the event day of event, news of US trade sanctions against China will cause investors to pay more attention to those Taiwanese MNEs directly affected by the tariff sector perimeters. And we can browse the Google search volume. I use these two keywords, and region is Taiwan, period is 2019, from very beginning 2018 to the end. We can see that when my first event, the investors' information need, they Google it, sharply increases to here. And maximum at the phase 1 tariff implementation. And second highest is the phase 3 tariff implementation. And furthermore,
do you think that your hypothesis one has enough tension? I mean, why would people that are interested in these companies not look at the ones that have sanctions?
Because the tariff shock is so cause the huge impact on them. They didn't know what is going on. They didn't know. They are curious about whether the Trump will impose or not, or is a cheap talk, or whatever. So.
But this has been in the news, like it's super salient. It's not something that you can miss because of lack of limited attention, right?
I argue that my argument is that macroeconomic news will drive investors' attention to pay their attention on those firms affected by the tariff.
Yeah, no, I totally agree with you. I'm just saying if it has enough attention, but why would they not?
And one way to deal with, because I somewhat agree with the point. One way to deal with someone saying that you don't have enough tension is to say that, okay, but I'll economically tell you how big it was, right? So you knew it was going to happen, but I can at least tell you the magnitude of it. And maybe, I don't know, based on your expectation, that could be more or less. Who knows?
So. Okay. Can you state it again? I can get your.
Yeah, no, I totally agree with your hypothesis. I just think perhaps you can provide a little bit more tension.
Intention.
Tension.
Tension. Okay.
Like why wouldn't they be searching for this stuff?
Oh, yeah.
And you can say, well, maybe they didn't know about it, maybe, but
yeah,
they probably would.
If you want to put it plainly, it's like too obvious.
Okay. Almost 70% of public firms in Taiwan have facilities located in China. Almost 70%.
Right. So of course, so that's more support for why they would.
Yeah.
Right. And so you're just saying. So what was? You can say, well, this is how many people did. This was the magnitude of it.
Thanks. And like traditional literature mentioned that when accounting signals about a firm are more precise, investors assess a lower covariance of a firm's cash flow with those the market, thereby reducing the perceived market risk inherent to firms. And Armstrong 2019 shows that the quality of firms' accounting reports play a role in the transmission of monetary policy by influencing the information asymmetry between firms and capital providers. So my hypothesis too is that given my H1 holds, higher accounting quality will effectively mitigate the impact of the tariff shock as investors focus more on firm-specific information, certain papers. And here's my 5 key events and brief, and key event description. And the rightmost column is the quarterly financial report. I need to match the quarterly financial report because some events, investors can get the newest data points of financial report, so they need to see the previous quarter financial report to get information. And also argue that tariff news will reshape their expectation on those firms affected by the tariff. They will re-examine and recheck their stocks, whether the better accounting quality the firm have or not. So here's my identification strategy. First is all these firms should disclose their information about their investment in mainland China in their financial reports. So first is whether the firm has a manufacturing plant in China or not. And second is the disclosure of segment reporting. If customer account for more than 10% of total revenue, they also must disclose. So I use the second disclosure criteria is whether the firm sells to the US or not. If the criteria meets two of these, that is my treatment group. So you can see this figure is cumulative abnormal returns during the US-China trade war conflict over 300 trading days from very beginning in 2018 to 2019 March 27th. We can see that in the early of 2018, the trend of between these two groups are so far. But as the tariff news announced, and like Trump signs China's economic aggressive memorandums, their trend has been separated. And we can see that the cost of treatment group is always lower than the controls. So it things like investor can adopt these two criteria to separate winners and losers. So the trend is will be like this.
So would you say from that, like, ended up not making a big difference? Because by the end, they're almost the same.
Yes, I would say maybe in the end they are have same experience from a negative shock, but you know.
So investors were scared.
There's a
It turned out not to be as bad as they thought, and
because the effect of tariff is huge,
yeah.
and supply chain are close relationship with each other. So I would say those treatment groups experience more negative.
Yes.
Yeah.
But by the end,
there's
right?
effect.
Yeah, but like, I don't have my sunglasses. So I can't. But how long is that? Like 6 months?
300 trading days.
Right, but so from that last line that you have there.
This line?
Sorry, the last vertical line that you have there, that where you were just.
1 to 19. Yeah.
Oh yeah. It's a 2019 January
2 days
2nd.
prior to that.
Yeah.
No, anyway, all I'm saying is from the last event that I see there to the very end, the gap closes.
Oh yeah. It is because entrepreneur they recommend government of Taiwan to figure it out. So there's a new policy for them to get back to Taiwan to have investment. So that is because the new policies.
So you think this would be different if you look at Chinese companies?
Yeah.
Okay.
Tricia, before you move, so if I follow you, the red line is companies that do not have a big U.S. customer.
Yes.
But they still can have a lot of small customers.
Maybe, but the investor will not know because they are not disclosed on the financial report.
okay, they can do it voluntarily though.
Maybe, but due to the I did not to to see it, but I will take your recommendation and consider to.
Well, actually, I was just thinking like maybe I am stuck with the different diff, but like they go like very much together. It's not like the control group is like nothing happening much. It sounds more like
I would say there's a co-movement between industries. Co-movement.
Yes.
Yeah. And if I can separate from them, I think it's not a process.
I think they just look very similar in different levels. I understand, very similar. It's like, to me, when I like the treated group, it's not. Yeah, it's a little bit more treated. But it's not like a clear cut treated and controlled. I think.
Mhm.
I think adding some anecdotal evidence, like real example, like as Juan mentioned, like the company that disclose like small firms and then versus like do not disclose any firms, and then like if you can show some like real examples to the readers, they may have better understanding of like your argument.
Okay, thanks.
So maybe just a quick thought is if you can show us like the trading volume reactions at the event date.
Oh,
that
trading
might
volume.
also help us understand.
Okay, because the tariff shock is, this topic is so huge. So I want to try my best to narrow down and focus on the event study. So I will consider what you recommend.
And another thought before I forget, maybe like look at the number of connections.
Oh, supply chain.
I'm sorry.
Supply chain. Supply chain. Yeah, cool.
Like
Nice.
because companies with more customers, like from
Yeah.
it could be like.
I will sign your paper.
No, I don't have it. I'll shut up for now.
Yeah, this is a 5 respective key events, of course, over 3 days before and 3 days after. And we can see that except June 15th, the control groups cause lower lane treaties. The other 5 events, the controls cause is higher lane treaties. And the right corner, this is these 5 events average. So we can see during the tariff shocks, is T equals to 0, and 3 days before and 3 days after car. Both groups experience negative shock, but treatment groups experience more negative than controls. And to test my H1, H2, I will employ the following regression model. My dependent variable is market adjusted cumulative abnormal start return for I over the window. 1 day before and after these 4 events. And to capture the investor sentiment, I will follow Jack et al. 2012. They based on Google raw volume to calculate the abnormal search. I will I will calculate it. There's a abnormal search volume for fund I on event day T. It's a raw Google search volume minus the average raw Google search volume on the day T minus 1 day, and using the average raw Google search volume on the T minus 1 day as a scale. And as proxy for my accounting quality, I will adopt the absolute value of abnormal accruals and multiply by -1 for better interpretation. And here's my control variables. I control for other factors that potentially influence the market returns: loss, leverage, size, sales growth, and the sigma of earnings, and persistency, CAP and beta, book to market, ROA, and market power.
Can I ask a question? So I think accounting qualities about the past, and I thought investors would be more interested in like information that are provided at the time. Like there could be more voluntary disclosures, like conference call that firms can provide
Oh.
in addition to those previous like historical.
I got your point. There is no need for business to disclose the risk of the trade war because at that period they didn't know whether the Trump will implement or not. So it's under the uncertainty. So what the investor know is their financial reporting and the news on the internet. So what I argue is that better accounting quality can provide more precise information about the firm's future cash flow, and those firms have a better accounting quality when they experience a tariff shock, they will have a lower a better accounting quality will play a moderating role for them.
So you're suggesting that because those accounting informations are the only information that investors can have at the time of the event.
Yeah. What they only have is the financial reporting, and the entrepreneur didn't figure out what will happen in the future.
I'll say I had a similar, like, first of all, discretionary accruals or whatever, like, reviewers don't like that. I mean, that's just an issue.
Mm-hmm.
But like, why couldn't they just provide supplemental disclosures about their exposure, like in a risk factor section or something like that? That could be more useful than discretionary accruals.
I think they will be another research because MDMA of financial report, they will disclose their
some
risk.
kind of textual analysis about.
So I can explore.
Yeah, get Sinman to help you with that.
Yeah.
Could do
Thank
it.
you very much.
And I'm thinking like, I mean that, and then you think about it like there could be an unraveling effect where like, if I don't have significant exposure or I'm not worried about it, I'm gonna disclose. But for the firms that don't, then everyone freaks out.
Oh, cool.
Yeah. So, I don't know.
Thanks. And my primary data source is from Taiwan Economic Journal. They have all the data we need. And I mainly focus on the following four sub-industries because of these four sub-industries have a more cause more negative impact from tariff. Manufacturer of electronic parts and components, and manufacturer of computer, electronic, and optical products, and manufacturer of electronic equipment, and the manufacturer of machinery and equipment. And my event study includes 3,130 firm event observations and 626 firms after the sample selection, which includes 1,175 firm event observation and 235 firms in the treatment groups, and the bracket is the control groups. And primary inference is that if my hypothesis one holds, implying that investors will pay more attention to tariff-affected firms, that is treatment group, under the shock of the event day. In other words, market participants will have a high information demand for tariff-affected during the tariff shocks.
I was wondering, is it the accounting quality or just the fact that there's more information out there for those companies? Because it kind of sounds like you're assuming that there is this announcement and people go look at the financial statements and think, what's going to happen? When I don't know, I will be waiting for like an announcement of the company, like for instance, we're not affected, or we have been insulated by certain mechanisms and whatever. Like people are not going to look at the financial statements right away.
Yeah. So H1 is that during the tariff shock, financial report user will see, whether my stock will get impact or not.
Mm-hmm.
So is there a facility located in China? Is US as a major customer or not is the first. I need to build my fact on this. So I will like this. My H1 will be test from this one. No. Oh, I made a mistake. It is beta 4 treated times abnormal search. Treat is this one. And H2 is based on the fact of beta 4 is significantly, and we times accounting quality as a moderating variable to further test. These coefficient will be positive or not.
No, yeah, I was wondering whether accounting quality is really accounting quality or just friends with more information out there.
I'm mainly focused on the Jones model. And
Sorry?
You mean accounting quality major? Can you repeat your question again?
Yes. I wonder whether it's accounting quality, the effect that you're capturing, or if it is just that for those companies there is more information available.
Maybe both.
Is there kind of
Yeah. I would say better accounting quality provide more, can help investor to expect the firm's future cash flow more precise. I would say that.
All right.
I have an additional question on, so I know it's an event study, but I wonder if you kind of can longer the window a little bit, like 30 days or 60 days, so that see whether the hypothesis, the result that you're looking at is decrease over time goes by. That might be also be interesting.
And because of the U.S.-China sanction, they sanction to each other, so the events, if I increase my event period, there will be a lot of noise. So I want to try my best to clean my settings. Mainly focus on the U.S. sanction to China. If my H2 holds, it suggests that the higher the accounting quality of a firms affected by tariff, the lower the negative tariff shocks they experience, which means that those tariff-affected firms have a higher accounting quality. They will be able to play a moderating role to market participants during the tariff shocks. And here's a abnormal search measurement. It's from early to 2018, January 1st to event day T, to consider the accumulative tariff shock. So the raw Google search volume on day T minus average Google volume over 2018 January 1st to T minus 1 day over the average Google search volume.
Is this Google search volume like all over the world thing, or is it just focused on the?
Focus on Taiwan. Only focus on Taiwan. I use two Chinese keywords as a capture for investor attention.
So it's like the lower bound. So you're just because you use the Taiwan.
Yeah.
Okay, I see.
Here's my discretionary version from Francis Lafon, Olsen and Schipper 2005, and also Tosari et al. 2005. And this is my sample selection process. And I mainly focus on these four sub-industry of manufacturing. And these four sub-industry accounts almost 50% of total manufacturing firms in Taiwan. And here's the test between treatment and controls we can see that cars and content quality, that shows the indifference between them. Other control groups, some of it shows significant. But it's okay. What I mainly focus on is the accounting quality. I want to make sure there's no difference between treatment groups and control groups. Here's a result. When using abnormal search for proxy for abnormal Google search volume, is accounting quality 1 and accounting quality 2. Is that the period over 1 day before and 1 day after's car, my hypothesis one can show insignificantly. The other 1 day before and 2 day after, 2 day before and 1 day after, 2 day before and 2 day after shows negative and significantly. That means that in a very short period, the investor cannot recognize those firms are directly affected by tariff, but the longer period they can know. And this result also means that investor will view those tariff affected firms negatively. And also when we further investigate whether accounting quality will play a moderating role or not, the result shows that positive and significantly. Yeah, this means that during the period of trade war confliction between US and China, accounting quality, those tariff affected firms have a better accounting quality, do provide to play a moderating role to market participants. And when I'm using the logarithm of abnormal search, the results shows robust. Here's my conclusion. My cross-sectional analysis of cumulative returns supports my both hypotheses, which means that investors' attention is driven by macroeconomic news, causing them to pay particular attention to tariff-affected firms. And these results suggest that investors have negative sentiment regarding the US trade sanction against China. And this finding echoed Chen et al. 2018, that investors would prioritize macroeconomic news over firm-specific news. In addition, we also find that higher accounting quality of tariff-affected firms has a moderating effect on investors, which is aligned with Armstrong et al. 2019, suggesting that the impact of the tariff sanction is mitigated by the quality. Sorry. What happened? I'm finished that.
Yeah, you're on the last part.
Thank you very much.
So all three very good presentations today. That was good. How's the trivia thing going? You guys, any new information? Who's keeping is it you? You got
Yeah,
the.